And we begin World Business Watch by putting the spotlight on the Indian rupee, which has put on a dramatic show, rising for the second straight session after breaching fresh record lows repeatedly just last week. Now, the currency's recovery reminded markets just how quickly the tide can turn. In the span of just a few days, the rupee swung between its weakest ever of over 91 per the dollar and 89 per dollar by Friday. The currency delivered its strongest single-day gain in over 3 years, slipping below the 90 per dollar mark. Now, adding to the positive mood is growing optimism around India's bond market. Government bonds are likely to be included in Bloomberg's Global Aggregate Index, which is tracked by nearly $3 trillion worth of passive funds. If this plays out, it could bring in nearly $25 billion of inflows over 10 months that will offer meaningful long-term support to the rupee. The turnaround in the rupee came as the Reserve Bank of India stepped in. Earlier last week, the rupee had weakened to record levels, as I mentioned earlier. Lingering uncertainty around the India-US trade talks and steady portfolio outflows kept pressure firmly on the currency. And that is when the Reserve Bank of India stepped in, and sentiment finally seems to be catching up with solid economic fundamentals. The central bank's recent actions, especially the currency swap orders, quietly set the stage. While such liquidity moves can initially look neutral or even slightly negative for the rupee, history suggests otherwise. Once liquidity conditions stabilize, the RBI often gains room to actively manage volatility. Markets have seen this pattern before. In early 2025, similar steps were followed by direct dollar selling that helped calm markets and led to a phase of rupee stability and gradual strength. And this time too, the result was swift. From last week's highs, the rupee has strengthened by over 2% since Friday.